Hi there, welcome to the Global View. Let's get this day started. I'm Nadine Blaney. Look, we are expecting a bit of a flat start here, but already the Nikkei futures are up by 1.5% after U.S. stocks finished higher, led by another strong rally in tech and semiconductor shares. There's the finish on your screen. Note the Russell 2000 up by 1.2%. So investors really looking past those renewed tensions in the Middle East to focus on AI-driven growth and a resilient U.S. economy. Micron surged, one of those chip makers that did outperform. It plans to invest more than $250 billion in U.S. manufacturing by 2035. Sandisk was up, Applied Materials was up. Meta also advanced on reports it will begin manufacturing its own AI chips in September. PepsiCo, though, fell 3.3%, and that's despite beating revenue expectations. Costco as well. It was 4% lower after softer June sales. And with reporting season approaching, analysts expect S&P 500 earnings growth of around 24%, led by tech. Weekly jobless claims unexpectedly fell, reinforcing signs the labor market remains stable. U.S. existing home sales unexpectedly fell in June as tight inventory boosted house prices to a record high, and the Middle East conflict kept mortgage rates elevated. Markets continue to price in a 25 basis point Fed Reserve rate hike by December following recent hawkish policy signals. U.S. bonds rallied after a sell-off, the 10-year sliding nearly 3 basis points after hitting a 10-week high on Wednesday. The U.S. dollar was little changed, and the Aussie dollar at 69.4 this morning. Oil was supported by those escalating tensions in the Middle East, Iran launching retaliatory strikes against U.S. military targets in the Gulf. Brent fell 2.5%. But gold rose more than 1% as bargain hunters emerged after prices fell to a one-week low. Copper hit a 2-week high as the U.S. dollar was slightly softer. Well, AI remains the dominant investment theme, even as markets contend with a more uncertain macro backdrop. The focus is now shifting beyond the largest tech names to where the next phase of AI and the trade could develop. So joining us now to unpack it is Ganti from S&P Dow Jones Indices. Hi, Anu. Welcome to the program. So is that right? We're now shifting the focus beyond, those names that have really led the charge?
That is an excellent question. It's great to be here, Nadine. And it's certainly been a choppy couple of days, right? The market was up today. We saw the bounce back in chip makers. It was a rough day yesterday. So the market is sort of wrestling with the sustainability of the AI trade, which has had legs for so long, with the S&P 500 up 15% in Q2, despite a lot of geopolitical concerns that are sort of resurging and resurfacing, especially with oil prices rising, inflation concerns, concerns about an impending Fed rate hike. So the question is, are we in the middle of a temporary blip or the sign of a regime change? And the other point that you alluded to is, of course, the shift between mega caps and smaller caps across the spectrum, because we've seen that chip makers in our S&P Semiconductor Select Industry Index was up roughly 144% in the 1 year through June, outpacing our S&P 500 Top 10 Index, which has been very remarkable to see. So the question is whether the tide will turn back towards these mega cap hyperscalers.
Yeah, okay. So small caps, we're watching mid caps as well. What is the volatility or lack thereof, starting to reveal to us as investors as well?
Yes, that's an important one to wonder about, because with all of these market jitters in the US and globally, you might expect volatility to have gone up. But what we've seen is actually that index volatility has remained relatively moderate because correlations have remained low. But there's a lot going on under the surface, under the hood, looking at dispersion, or the performance spread between winners and losers, have reached extreme levels for not just the S&P 500, but for the small caps, for the S&P 600 as well. And if you go even deeper and look at tech sector dispersion, and specifically semiconductor dispersion, we reached highs, record highs for semiconductors of over 100 100% in April. And part of this is as investors increasingly are scrutinizing earnings. For example, we saw the lackluster reaction to Broadcom's earnings beat. We saw the remarkable reaction, positive reaction to Micron. And then, of course, recently we saw the disappointing reaction to Samsung earnings. So there's been a lot of divergence within the semiconductors trade, causing that rising dispersion. So potentially a fruitful environment for skillful stock pickers within this space.
Yeah, okay. Well, we like the sounds of that. But just on the sort of AI semiconductor story, is there a lot of dispersion within that sector specifically? And do you expect, the leadership, I suppose, in that space to change?
Yes, and we're definitely seeing a lot of dispersion within tech, especially within semiconductors. And to your point of do we expect this to continue? We certainly do. One of the reasons for that is we have an index called DSPX, which actually measures the market expectation for future dispersion over the next 30 days. That has been relatively high as well, which tells us that the market is continuing to price in this uncertainty and this continued dispersion within the overall market, within the S&P 500. Of course, June was an interesting month because we saw, again, outperformance within the smaller cap space, sort of a return to defense in some of these cyclical sectors. So it'll be interesting as we get into Q3. Of course, we've got earnings season coming up. The question is what the Fed's future rate trajectory will be as well. So there's a lot of uncertain variables hanging in the balance.
Yeah, all right. It is absolutely fascinating. Now, we've been discussing down under here a lot, as everyone around the world is, this sort of US exceptionalism story that's really being driven by AI, really being driven by the semi story. Is that set to change in any way? Because the real benefits have been really focused. I mean, yes, South Korea, but SK Hynix now listing in New York, as you know. Do you anticipate that we'll start to see a broadening out of the AI joy, so to speak, to other markets around the world?
Yes, and what you're mentioning is top of mind, of course, because all of the trends that we're seeing is not unique to the U.S. Korea is top of mind as well, with increased concentration within this space. A lot of jitters as well that we've seen overseas. But to your point about whether we'll see the broadening out of the trade, the U.S. Certainly we've seen that broadening towards mid and smaller caps. Korea, of course, we've seen the outperformance within the semiconductors space. Of course, we did see some recent sharp sell-offs. So it hasn't been a smooth ride all the way. Another country to watch, of course, will be Taiwan, semiconductors and hardware exposure within that space. So these are a couple of spots to watch, and to watch the overall tech sector in addition to semiconductors. And talking about volatility and dispersion again, you can also measure dispersion at the country level. And we saw in early June that number for our S&P Emerging Plus Index reached a high of 58%, which tells you that there's increased divergence at the country level. So countries with greater exposure to tech, to semiconductors like Korea and Taiwan benefiting, while other countries like China, for example, even if they're a greater weight within the index, have a lower exposure to tech. So it really has been all about technology within these countries globally.
Oh, well, thank you. Now, just on that regime change question, which markets are still grappling with, what's the answer anew in your view?
Yes, and I certainly, left my crystal ball at home, Nadine. So it's going to be a tough one, right? But I think if we look ahead to Q3 and Q4, there's a couple of things that we're watching right now. There's the overall macro element, which is, of course, rising oil prices, the volatility there, uncertainty in terms of future interest rates, because that will impact a lot of these tech companies as well. We're also looking closely at earnings season coming up to see whether the market is going to increasingly scrutinize scrutinize some of these companies, especially the semiconductor companies and tech. So there's certainly a lot to look forward to, and of course, jobs and overall economic growth within the U.S. So those are a couple of elements that we're watching.
Well, it's been a pleasure to speak with you this morning. Your afternoon, of course, anew. I hope you get out and enjoy the weather. Thank you.
Likewise. Thank you so much.
Joining us from S&P Dow Jones Indices. All right, let's check in on this local market. So we've got the SPY futures pointing to a pretty flat open. We'll be watching the gold miners. We've had a number of production reports, but also we saw the price of gold rising. Overnight, we'll be watching energy as well. Energy prices still well supported, despite the gains that we saw on Wall Street. Most of those were tech-related, semi-related, and that is why perhaps our market might underperform those, not only in the U.S., but around the region. We will see. I'll take you through the open next.